Hi guys, welcome to Golden Eye. Today we are doing second method of joint venture, that is in the books of each or any co-venture. Let's understand this through a small example. A and B both are contractor. They decided to work in joint venture. In joint venture, B can instruct to A for maintaining joint venture account, or A can instruct to B for maintaining joint venture account, or they both can maintain joint venture account. In type B, in the books of each or any co-venture account, there is no need to maintain separate joint bank account. In type A, separate set of books of account method, we can make payment through three modes. First, A can make payment personally. Second, B can make payment personally. Third, they both can make payment from joint bank account. But in this method, either A will make payment or B will make payment. Under this method, there will not be any entry related to capital contribution. Type B in the books of each or any co-venture account. First is when material or assets sold by those co-venture who is maintaining joint venture account. In that case, entry will be cash or bank account debit to joint venture account. If material or assets sold by those co-venture, if material or assets sold by other co-venture, in that case entry will be other co-venture account debit to joint venture account. Next is when material or assets supplied by co-venture. Next is when material or assets supplied by those co-venture who is maintaining joint venture account. In that case, entry will be joint venture account debit to purchase account to assets account. If material or assets supplied by other co-venture, in that case entry will be joint venture account debit to other co-venture account. Next is when material, assets, share, debenture taken by those co-venture who is maintaining joint venture account. In that case, entry will be purchase account debit, assets account debit, share or debenture account debit to joint venture account. If material, assets, share, debenture taken by other co-venture, in that case we will write the name of co-venture only. So entry will be other co-venture account debit to joint venture account. Next is when expenses paid, material or assets purchased by those co-venture who is maintaining joint venture account. In that case, entry will be joint venture account debit to bank or cash account. If expenses paid, material or assets purchased by other co-venture, in that case entry will be joint venture account debit to other co-venture, means we will write only name of other co-venture. Fifth is for any type of abnormal or abnormal loss, there will be no entry, as we do not maintain accounts related to assets, expenses, etc., as there is temporary partnership in joint venture. Sixth is for net profit in joint venture. If profit received by co-venture who is maintaining joint venture account, so entry will be joint venture account debit to profit and loss account. If we are crediting the profit to the name of co-venture, so entry will be joint venture account debit to co-venture account. In case of loss, entry will be reversed, co-venture account debit, profit and loss account debit to joint venture account. Seventh is when any payment received from co-venturer, so entry will be cash, bank or bills receivable account debit to other co-venture account. If we made any payment to co-venture, so in that case entry will be other co-venture account debit to cash, bank or bills payable account. Let's start the question. A of Hisar and B of Karnal entered into joint venture sharing profit and losses in the ratio of 2:1. A bought goods worth rupees 46,000 and dispatched the same to B to be sold on goods account. There will be no entry in the books of either party for goods sent by A to B. A paid rupees 2,050 rupees for freight and drew a bill on B for rupees 25,000. The bill was discounted by A for rupees 24,700. It means there will be a discount of rupees 300, 25,000 minus 24,700. All the goods were sold by B for rupees 75,000. B was entitled to a commission of 5% on sales. He incurred selling expenses of rupees 5,500. and settle the account by means of a bank draft. Give ledger accounts in the books of both the parties. Let's understand the answer. Books of A, joint venture account, debit, credit, particulars amount, particulars amount. A bought goods of rupees 46,000. So what will be the entry? Entry will be joint venture account debit to bank account. We will not write name of A as A is maintaining books of joint venture. So we cannot write its own name. So instead of A, we will write to bank. So entry will be joint venture account debit to bank account 46,000. Why we are writing to bank account? While purchasing goods, bank must have reduced. So that's why we are writing to bank account. A incurred freight expenses of rupees 2050. So entry will be joint venture account debit to bank account. B sold all the goods worth rupees 75,000. So entry will be bank account debit to joint venture account. If we do ledger posting of joint venture, then we write by B sales 75,000. The second effect of this will come in the B account. So we will write to joint venture sales 75,000. A drew a bill on B for rupees 25,000. So entry will be bills receivable account debit to B account. If we do ledger posting of B, then we write by bills receivable. But this bill was discounted by A for rupees 24,700. So there will be a discount of rupees 300. So discount we will write in the joint venture account. So to bills receivable account, discount 25,000 minus 24,700 is equal to 300. So this is a expense. Next is B is entitled to a commission of rupees 5% on sale. Sale value is 75,000. So 75,000 into 5%, then we get commission of rupees 3,750. So entry will be joint venture account debit to B account. Here we will not write to bank account. Why? As this expense is incurred by other co-venture, that is B. Next is B incurred selling expenses of rupees 5,500. So second effect of this entry will come in the B account by joint venture 3,750. Next entry is B incurred selling expenses of rupees 5,500. So entry will be joint venture account debit to B 5,500. So the second effect of this entry will come in the B's account by joint venture 5,500. A and B will share profit in the ratio of 2:1. Total of credit side item is 75,000 and total of debit side item is 57,600. So total of credit side item is more. So there will be profit of rupees 17,400, which we will distribute in the ratio of 2:1. Here instead of A, we will write profit and loss as A will directly transfer its own profit to the profit and loss account. So A share is 2/3. So 17,400 into 2/3 is equal to 11,600. And for B's share 1/3. So 17,400 into 1/3 is equal to 5,800. So B's share we will transfer to the B's account by joint venture profit 5,800. By bank 34,950 balancing figure. Now B is maintaining joint venture account. Books of B, joint venture account, debit, credit, particulars amount. A purchases goods worth rupees 46,000. So entry will be joint venture account debit to A 46,000. The second effect of this entry will come in the A co-venture account by joint venture account 46,000. Next is A paid freight expenses of rupees 2,050. So entry will be joint venture account debit to A, expenses 2,050 rupees. So second effect of this entry will come in the A co-venture account by joint venture 2,050 rupees. A drew a bill of rupees 25,000 on B. So in this case entry will be A co-venture account debit to bills payable rupees 25,000. This bill was discounted by A for rupees 24,700. It means there is a discount of rupees 300. So how we get 300? 25,000 minus 24,700. So entry will be joint venture account debit to A 300. So second effect of this entry will come in the co-venture account by joint venture 300. B sold all the goods worth rupees 75,000. So entry will be bank account debit to joint venture account. If we do ledger posting of joint venture account, then we write by bank 75,000. B will get commission of 5% on sale. So sale value is 75,000. So 75,000 into 5%, then we get 3,750 commission. So entry will be joint venture account debit to commission account. And B also incurred selling expenses of rupees 5,500. So in this case, entry will be joint venture account debit to bank account. We will not write name of B. As B is maintaining joint venture account, we cannot write its own name in the joint venture account. So credit side of this item is more than debit side item. So there is a profit of rupees 17,400, which we will distribute in the ratio of A and B. 17,400 into 1 by 3 is equal to 5,800. We will not write here name of B, as B will directly transfer its profit to the profit and loss account. 17,400 into 2 by 3 is equal to 11,600. So A's share profit will transfer to the A's account by joint venture 11,600. Balancing figure 34,950. Now that this is done, if you have any doubt, then please let me know in the comment section. Thank you.